AVGO is trending after delivering a standout quarter that reinforced its growing role at the center of the global AI infrastructure build-out. The company reported record first quarter results driven by explosive demand for AI semiconductors, beating both revenue and EBITDA guidance as hyperscalers continued ramping spending on custom accelerators and high performance networking. The strength of the report combined with an aggressive bullish long term outlook has sparked intense discussion among investors about the company's strategic positioning in the AI supply chain. The biggest driver of the quarter was triple digit growth in the company's AI semiconductor business as demand surged for custom accelerators and AI networking chips used in large scale data centers. The management of the company said the momentum is only accelerating, guiding to second quarter revenue of roughly $22 billion, including about $10.7 billion from AI semiconductors alone, implying nearly 140% year over year growth. That surge highlights how quickly hyperscalers are scaling their AI compute infrastructure to support training and inference for large language models. Alongside its strong quarterly performance, the company significantly raised expectations for the future of its AI chip business. The management of the company now believes the company could generate more than $100 billion in AI chip revenue by 2027, fueled by continued deployments from major hyperscale customers such as Google, Meta Platforms, Anthropic, and a newly highlighted partnership with OpenAI. These companies are rapidly scaling AI clusters and custom silicon programs, creating a multi-year demand wave for the company's design and networking capabilities. Another theme, another key theme emerging from the results is the rising importance of AI networking. The company noted that networking chips, critical for connecting thousands of GPUs and accelerators within AI clusters, are gaining share within its AI business and are expected to represent roughly 40% of total AI revenue next quarter. This reflects the growing complexity of AI infrastructure, where high bandwidth connectivity between compute nodes is becoming just as critical as the chips performing the calculations. Outside the AI boom, the company's traditional semiconductor segments remained relatively flat but showed signs of stabilization after a cyclical slowdown. Meanwhile, the infrastructure software business, bolstered by the integration of VMware, delivered steady performance. The management noted that software revenue is expected to grow around 9% year over year, with strong enterprise demand and VMware bookings helping offset slower growth elsewhere. So you can find more about all of this in the description box below. Okay, so this is the 4-hour chart. It is reflecting this gain we are looking at right now, the post-market gain of 6.13%. Okay, so the extrapolation is saying that this strength might remain in place up till midday today, the 5th of March. Then after that, it might go into a consolidation. Okay, we have an upper projection here of we have some projections here 336 and 341, 336 and 341. Okay, good thing it had a downward projection of it had a downward projection of 294, 290. Let's see what we had, 294. 294.43, but it's no longer reiterating that projection. So that's a positive. It's no longer reiterating a down projection. So everything is to the upside, positive, positive, positive. Okay. On the daily chart, this daily chart has not reflected what's going on right now. But all we can say is that the stock is. It looks like it is correcting within. No, it's consolidating within a longer term bullish trend. Its 200-day moving average, which underscores the underlying trend, is sloping bullishly upwards. Okay, yeah. So, but unfortunately, it's saying that today might be a down day, but we're not going to read a lot of meaning into that. But sadly, as well, we have a downward projection here on the daily chart, and the algos still reiterated it yesterday. The fourth, it's 248. So fingers crossed. Let's see. Let's hope it doesn't test this low of $248 because for some reason, whatever this algos I'm using here, if it projects any downward projection, it prints. The last one it projected, it happened. So let's hope it doesn't happen. Let's have a look at its weekly chart. On the weekly chart, it is looking positive. Okay, we are looking at weakness going into Monday the 9th. Then after that, there's a prospect of it resuming the uptrend and holding it up till the 24th of August. That's a positive. So what we can do is just see how the moving averages are aligning on this weekly chart. The stock is unfortunately consolidating, so we may not be able to get a reliable set of extrapolations, but let's see how the moving averages are aligning on this weekly charts. Okay, 21 week are aligning. Yeah, showing that strength momentum might begin to pick up anytime soon. At least by the 11th of May, momentum may have picked up. Let's have a look at the 21, 40, and the 100 week, 40 and the 200 week moving averages. So far, the 10 and 21 week moving averages are aligning in terms of extrapolations. Let's see. Okay, yeah, they're not aligned. They're not. You can see the 40 week moving average is divergence. It's saying that the decline is currently it's going to begin to decline at some point. Yeah, we don't have an alignment, but I think the 200 week extrapolation is still remaining intact. So there's no worry that there's a chance that whatever may happen, the fundamentals, the structure of the stock, the 200 week moving average may still remain intact. Let's see. Yeah, but on the daily chart, we are looking at the prospect of momentum waning. Yeah, and then we're looking at the 200 day moving average, maybe losing momentum. Yeah, we're looking at it that moving average rolling over towards April, towards the middle of April. Okay, and the 40-day moving average is expected to hold up and even continue to pick up as well. Let's see. Let's see what the other moving averages are saying on this daily chart. Yeah, okay, they are flat. They're flattish. They're flattish. Okay, so we have a divergence of moving averages on the stock, because the stock is consolidating. So that's why we don't have any unity. They're all divergent, and but in any case, I think there's a chance based on the weekly chart that the 200-week moving average is still going to remain strong. Okay, so let's see how all of this will pan out. And thank you very much for watching this video.